Hello everyone. In this video, we will see what happened in Nifty today, and we saw that the Nifty fell. It could not break 25,000 level, and how we could have avoided getting trapped in a false long entry. Especially like it was tempting to buy 25,000 call option after seeing that initial bull move here between 10 to 940 to 1015, this bullish rally, and so this 945 candle looked very convincing to go bullish candle because it broke the psychological 25,000 level, which often acts as a key resistance turn support. Many traders might have thought that this is it and jumped into long expecting continuation, but we see that it reversed and broke 25,000 again, and it was a bearish day. So let's analyze what signs were already on the chart that could have warned us not to take the long trade. So first, let me put CPR because I always trade with CPR. It's one of my favorite indicators. So what CPR tells is that today's CPR was very narrow, which typically signals a trending day, which means it's not going to be sideways. So that actually adds to the temptation that when you see that this price 940 candle, this would even the second candle 920 candle taking support at the CPR would have tempted like 25,000. It broke and then took support at the CPR. We could have taken call option here in this position, or even by seeing this and this candle closed above CPR, and so here we could have taken a call option, or even these two candles, it took huge support. So 10 o'clock, this region, anyone would have been tempted to take call options. And let's also put the exponential moving average. So I usually use 26 and 200 EMA. So if I put at this range, if you see at 10 o'clock, you have a big green candle that's actually close above CPR, and then the 26 EMA is also slightly pointing upward. So you have a double confirmation, like you have a pivot as well as the 26 EMA is broken, and then here anyone would have brought call option. It's so tempting, and 25,000 psychological level. So this position, this point here is a very tempting point to go buy call option. So in short, like around 10 a.m., it's a very decent setup. Briefly, both EMA and CPR gave me a bullish illusion. And then what happened really is that the price only moved 20 points only to reverse heavily. And then, so what did we miss here? What would have told me that don't go for call option? So one of the things that we can do is we can look at the first 5-minute candle, and it's a huge candle. It took from 25,950, it covers the psychological level of 25,000, and it went all the way to 25,058. So 2-3 strike prices it has cancelled, like 950 is a strike price, 25,000 is a strike price, and 25,050 is also a strike price. So when we have such huge candle that ranges from 2 to 3 strike prices in options, I usually mark them with 2 horizontal line to have their range. So if I want to go long, I would see a clear bullish candle that actually closes above it to confirm that it's going to go up. But if you see what happened here at 10:15 is that though it's a green candle, it looks like an inverted hammer. So this shows me a sign of rejection. So here it's a resistance zone right under the psychological level. And also if you see the EMA is here, yesterday it was slightly pointed up, but here it's quite flat. And it shows that it's a sign of a weak momentum. So if this green candle at 10:15 would have closed above this horizontal dotted line, which is the first 5-minute range, I would have maybe confirmed that it's going to go at least till here to the next strike price. but it didn't happen. And also the EMA was flat, and now I know that the, the CPR is narrow, and so the only other option to make this day trending is that prices should fall, and that's what happened exactly. So what is the final takeaway is that, so even though like we have the chart that showed initially some bullish structure, like we had the narrow CPR, price broke the 25,000 level, and also briefly a slight upward pointing EMAs, but we did not have a strong bullish close above what we can call as the initial balance or the first 5-minute big candles range. And the rejection exactly at that point, at this point, tells me that selling pressure is building and maybe it's time to buy the put option. So this is one idea. Had we waited for a clean breakout above 5-minute high with high volume, we would have avoided the trap, and or we could have taken the put option to capture this downward trend, which happened for the rest of the day. And so thank you for watching this video. And again, I should tell you that I'm not a SEBI registered advisor. This video is only for educational purpose, and I just like analyzing chart. Even though I don't trade or I trade, I just analyze the chart and share with what I find. Trading, especially options trading, involves significant risk of your capital, your hard-earned money. So please be cautious. If you want to trade or take any trading decisions, please consult a certified financial advisor before making any trading decisions.